Good morning, everybody. These morning stock market analysis will help you make a lot more money. So, I'm going to be doing these daily to give you some lessons, tips, and tricks that you can use every week to increase the amount of money that you make trading options. So, jumping right into it, on a monthly chart, we see this push past this high right here and this high. And so, in the future, we see price come back down. It kind of consolidates and then it also breaks this high. Now, if you are doing it very precisely, you can see that price tapped out that high. And so essentially, how the market is going to move is it will create a series of highs and lows, right? It'll kind of move like this. Every time it breaks a high, it will have a tendency to come back towards some area, okay? And then this is where you would enter to anticipate the formation of a low, and then price would continue to push higher, break another high, and then create that same pattern for a future low to be created. So this is a very simple strategy that you can use to exploit the market. And now I'm going to show you how to exploit this on a day-to-day basis. So as you can see, I started off on the monthly. This is to simply show me where the overall market is going. It's to show me the story of the market. Now, what you want to do is you want to look at the most recent leg that price just made. So it was this one. And so in this leg, your philosophy should be because price became cheaper, there will be a tendency for people to buy and push prices higher. Okay. And this tendency, as you can see right now, will cause a low to form, right? And then people will actually start buying until we break this higher right here. And so now, our analysis for the next few months and next few weeks to come should be that the market is going up, that it's going to be in an uptrend. And so the only contracts that we should be risking more on, or the contracts that we should be buying the most, is going to be calls contracts. And now the next thing you want to do once you have identified the overall trend based on how high or low price is, you want to mark out where price could go throughout this next given week. So I always start off by marking out the low of the month and the high of the month. And the reason that I do this is because it gives me a context as to where the market is this month, this week, and then eventually to the day. But this will help you kind of break price down in a range. You can see this range is much more easier to deal with price and look for setups than it is doing this whole range. So we want to take trades until we hit either this major liquidity or this major liquidity, right? And these are just major areas of liquidity because it's the high and low of the month, right? So I do the same thing on a weekly chart as well. I drop down to a weekly and then I mark out the highs and lows. So the highs and lows of last week would have been here. And this should say monthly. Apologies. Change that. Go. Make sure we're still accurate. Okay. So I do the same thing on the weekly chart. So we're going to mark out the previous week. We see this candle right here was last week. And so we're simply going to mark out the high and the low. Now, this gives me an even tighter range to work with. And if price wants to target the major liquidity on higher time frames, such as the weekly chart or the daily chart or the monthly chart, we are going to be prepared to handle that situation. All right. So what we're going to do is now we're going to drop down on smaller time frames. And I'm going to delete these real fast. Okay. And I'm going to do the same thing on the daily chart. Okay. Now, what you will see is the previous day's high was here. So I'm not going to mark out the low for two reasons. One, the weekly is already that candle's low. And two, we've already broken the previous day's high. Okay. So since those two things are true, I want to be looking at where price currently is in this pre-market gap up. You see market prices right here. And the first thing I immediately see is this fair value gap. Okay. Now it's important to note that on the higher time frames, we also see this higher time frame fair value gap. You will see this on the weekly and the monthly chart. You can call this a fair value gap or an imbalance, whatever is suitable for you. But another thing that I like to do is I like to mark out a higher time frame reaction area, which is going to be here. And I like to name that 1 month reaction. And this is simply to understand where price could react from strongly if I do take a trade. So let's jump back down to a daily. And now our bias is followed by two things. All right. So we see a market structure shift. My apologies. Start to form off a break of this high. Okay. And we see price come back down and it might be pushing back higher. Right now, one thing that you want to do when you trade, you never want to think in terms of it's going to do this. You're going to think of how likely it is. And the reason we mark out all these major areas of liquidity is because we want to see how likely is it for price to target those areas of liquidity because price will hunt those areas. And so given the context of where price is, we just want to trade and target those areas of major liquidity. And so in this imbalance, I'm going to be looking for a few things. So if I drop down to a 1 hour chart, firstly, you're always going to have strong reactions off an imbalance. So there's a lot of zones in here in which could cause price to have a quick move to the downside. Now, what you're going to do is you can either take this quick puts trade or you can wait for price to start bottoming out and then eventually start making this setup on lower time frames to allow you to capitalize and then target these areas of liquidity and then target these order blocks up here. Okay, we would target price until it gets up there. And I would take trades daily until we got to these areas of liquidity, until we swept this high, until we swept this high, until we potentially got to that area of liquidity.